I'm Darryl Montgomery, organizer of the New York Investing Meetup. The following is part of a presentation given at one of our recent meetings. It's one of 5 videos in the series. Now, let's hear Bob Rubin discuss how to profit from the falling dollar.
First, we're talking about how to trade currencies, and this has become a lot easier than it used to be. There are now ETFs, very broadly traded ETFs, that literally buy currencies. They go onto the foreign exchange market, they buy and hold currencies, and that is in effect what you are buying when you buy these ETFs. And you see I've got a whole list of them here. They're in several of the major world currencies. The Australian dollar, the British pound, Canadian dollar, euros, one conservative and reasonably safe way to make money on currencies. It's to find the currencies with the strongest uptrend against the dollar, because you know that money tends to flow where it's best rewarded. So high yields in a given currency are an indication that that is a strong currency overall at this point in time. Every 6 months, every year, and always keep moving your money into the highest yielding currency. Okay, most important factors in currency strength. That's looking for trends. In fact, later on in the presentation, I'll be putting up a website where you can see charts of currency prices and do technical analysis on them. Currencies, just like stocks or any other investment, wiggle up and down on a daily or hourly basis. The prices are constantly changing. So it could very well be that, for a day or a week, something would go up or down. But just like with stocks, what you're looking for is a consistent direction over a period of time. So if you see that happening, and if you see the economic underpinnings, and again, I haven't spoken about that yet, that's the next thing in the presentation. If you see the economic factors pushing in a certain direction to favor one currency against the dollar, and you see that the prices are actually reflecting those economic underpinnings, then you've got a pretty good bet. There are quite a few things that are factored into currency prices, and actually the currency markets work not unlike the stock markets, and people evaluate the strength of national economies in the same way that they evaluate the economic strength of companies. But there are 3 things that are especially important and that represent primary things that currency traders look at. Number 1 is the interest rates that are set by the central banks, different companies. Very simply, that's the price of money. Okay? The higher those central bank interest rates are, the higher is the price of that currency, the more valuable it is. So when the Fed recently has been cutting our interest rates, they've been cutting the price of the dollar on the world market. When other countries might raise their interest rates, they are in effect raising the price of their money. It's that direct. Second thing is inflation. That's captured and tracked very closely by currency traders, and that is again a reflection of the value of the money. The third thing is risk aversion. The markets definitely dislike instability. So let's say Venezuela right now with its Hugo Chavez down there. It's very unstable politically. Nobody's sure what's going to happen. So that militates against the currency. Wherever there's political instability or economic instability that's very marked, it will undercut the value of a currency. On the other extreme, let's say the Swiss franc has traditionally been viewed as a good currency to go to simply because it's a very stable economy, very stable government structure. Nobody is worried that there's going to be some crisis or catastrophe that's going to upset their economy. So those 3 things are very easy to track. And if you look at Forex material, those are the 3 main things that Forex traders are always looking at. Governments today have got vast currency holdings, and this has a huge effect on the price of these currencies around the world. In effect, governments invest in currencies just like you or I might invest in stocks. Now, the US dollar, up until now, has been the world's reserve currency, and there's a question about whether or not this will continue. What reserve currency means is that it is accepted universally as being of value, and you can do business with that currency. In fact, there are other countries around the world where the US dollar has actually been the co-currency with the national currency. You could go into a store, and buy something with US dollars in exactly the same way as you could use the local currency. That is coming to an end now.
To find out more about the New York Investing Meetup and to see the notes referred to in the video, please go to our website.